Run it. I can't take no loss. I don't even know what it costs. I hit the ground, then it go off. Yeah, hit the ground, then it go off. Yeah, I can't take no loss.
Hi and welcome to The Conscious Day Trader. I'm Yanis, and today I'm going to break literally a trade that I did 10 minutes ago, and it's on the pound dollar. It was the London Open ICT concept, and we're just going to see how this trade happened. It was quite a profitable trade. It provided $572. So I'm pretty happy with that. We're just going to break it through TradingView. This is where I will do all my charting. And where we're going to start is I want quickly to hide all the drawings. Just to show you, as you can see, I've mapped where the London session is. This is the London kill zone from 7 o'clock till 10 o'clock. This is where I'm trying to find my setup. And with the ICT concept, what we need to do in terms, if I bring back the drawings, is go to the daily and identify a bias for the day. And as you can see, the previous day, the bias, the price, the previous high and the previous low has been set. Also, what we can see here developing at the bottom area, and this is why I was short. We saw a development of relative equal lows. If I can move this graph exactly there to the pip. So these tend to be areas where liquidity, sell side liquidity. So if we change this into what it represents, sell side liquidity, and what that means is that a lot of people that will be going long will be placing their sell stops so they can get out of the trade. And what the tendency has for the market to do is come and liquidate that area, take all that profit out before it retraces on the upside. What potentially could have also happened, I was neutral from the start of the session, but as the session started and we start seeing that spike into the pound dollar to the upper side, I decided to go short. As you can see, I put the high and the low of the previous day, and that's the equilibrium where it was 50%. When the market opened, the 50% was pretty much where the price was. So that helps you to identify in terms of, am I going to be going long or short? There's two things that could have happened. One, we could have seen a drop into that sell side liquidity. And if that had happened, I would be going long and be looking for a retracement. After taking out this sell side liquidity, because the price traded up into the previous high and it became a premium price, which means it was above the equilibrium line, I had my bias short. And if we drop down to the 15-minute of the session, and let's see if I can replay that to 7 o'clock when I came to the market to show you what I was talking about. So we have the previous day high and the previous day low. So at this stage, we are neutral. Yes, we have an idea that this area might be triggered, and if it doesn't, and these are the equal highs that we were talking about earlier, that pinpoint there, and on the 15-minute, you would have to drag it quite far back to find that one there. So that is the sell side liquidity that the market will definitely come and take out at some stage, either this week or the other week, next week. Remember, we have NFP today, this week, so a bit of volatility coming in. So what did we see? If we click on the 15-minute charts, that spiked up, and then we see the box of the London Open. At this stage, I am looking for an entry to go short. What I had originally thought was that this is going to go up to this previous New York high and then it would crash down, but it did that there, but I didn't see any entry to go short, so you have to wait. And what happened, it went all the way to the previous day high, took out the previous day high buy side liquidity. If it took the previous daily high, there's no reason why it couldn't sweep up to this buy side liquidity and take all these buy stops that have been accumulating from your left side. But soon as it hit this area of the previous daily high, I was looking for a setup. I was committed to going short. And let's see what happened in the next candle. We had that breakdown there. Oh, that's given me the whole thing. I was on the 1 minute, and you can see this structure. If we zoom in here, this is what was developing. So we had it touched that previous daily high, took out the sell side liquidity that we talked about, and then it broke down and created a low swing, a swing low, which means that this is higher on your right side, this is higher on your left side, and that's how you create a swing low. Now I was looking for that swing low to be broken, and it did, and then it pushed back up, created a equal high here, never broke the top of that candle, and then it broke even further down. So I was short on this fair value gap here. That was my first position. So I entered, I believe something like this on the bottom, because I didn't want to lose the move. With the fair value gaps, you have to go in on the bottom. It just gives you the security of not missing that trade, because you'll see some fair value gaps, it touches the bottom line and then it continues down. So that was my first position, and I had one position in there, and I built a second position on the top of the fair value gap. Had to sit in a bit of heat. My stops were here. That's when I would be taken out. If it took me out after breaking the daily high, that is okay, because I would have had a 200 say loss, and then I would be waiting for it to come up here to see if I can find another entry later in the day. So I got this entry, and I got an exit at this order block here for £300, and then I saw it continue. This is why development that I keep saying, and I'm trying to get better, is to let the price, these original positions, pay me out all the way down to that swing low. Then I got my second entry here, third entry here, and I got my profits after hitting that order block here, the bottom of that order block. You can see that's how it's been filled by that long position up. It also filled another fair value gap on your left side. That was my final position, and then it went down. I did look at this. This is live data now, and as you can see, this is not trading advice, but just for education on paper trading. What you can see is that this got filled now and potentially continue with a target of these equal lows here. All right, and the bigger target of the daily target, if you wanted to hold it for a swing trade down to the buy side liquidity that we're talking about earlier. Where's your stops going to be? Trailing back behind these areas here. There you have it. That was my London trade from the ICT concept. And you can find a lot of live trades in my other videos. Make sure you click on them, and make sure you subscribe, because that makes me more, it gives me a reason to keep doing these, and to build this channel to something special about how trading in the real world works. If you are interested in ICT, he has a 2022 mentorship. If you're interested about pound averaging and how I trade in and out of trades, that you should listen to the Scruffy Trader. He's also on the YouTube realm. He also has a Discord, which I'm joined in, and we have chats every morning. Great community. And there you have it. Catch you on the next one.
Run it.